Hello friends, I hope you are all doing good. So in this video we will be revising the topic of income from house property. Yes, you heard it right. So we will be revising an income tax topic which is income from house property. So going forward on this channel you will be seeing videos on direct taxes as well as indirect taxes. So there will be videos both on direct taxes as well as indirect taxes. All these times I was uploading only the videos on indirect taxes, the GST and customs, etc. But now going forward you will find the discussion on direct taxes as well, income tax. Now, but the discussion on income tax will be limited. The discussion, see, on this channel, you will get two types of videos from now onwards. One is the videos on direct taxes and indirect taxes, which is GST and customs. This will be specifically for students who is doing CA intermediate as well as CMA intermediate. Okay. Also, the syllabus is anyways same to CS student also. But now the syllabus for CA intermediate and CMA intermediate is exactly same. So for them you will be finding videos on direct as well as indirect taxes, and there will be videos on indirect taxes for CA as well as CMA and CS final students also. So on this channel you will be seeing videos on direct indirect taxes for intermediate students, and for final students the videos will be completely on indirect taxes. It will be completely on indirect taxes only. Yeah, so let me straight away start the discussion on this beautiful topic. This beautiful topic, what is the name of this topic, sir? Income from house property. So there are totally 5 heads of income under income tax law: income from salary, income from house property, income from others, income from profits and gain from business and profession, income from capital gains, and income from other sources. So in this video we will be discussing, or we will be revising a topic called as income from house property. So what is this income all about, sir? What is this particular head talking all about? This head, basically, if you see a house property, from a house property you can arrive at 2 incomes. There are 2 incomes which are generated from a house property. One, you give this house property on rent, you will get something called as rental income. Correct? You will get something called as rental income. This rental income is taxable under the head income from house property. Now, if you are selling this house property, by sale of this house, you will get something called as capital gain, which is taxable under income from capital gain, which is taxable under which head, sir? Which is taxable under income from capital gain. So basically, a house property gives 2 kinds of income. One is income from rental income, which is taxable under income from house property, and one is by sale of this house property you get income under capital gains. Now section 22 to section 27 talks about income from house property. So in this video the discussion will be completely focused, focusing the discussion completely on income from house property only. Now what is this charging section 22 telling? Charging section 22 says rental income from a house property is taxable under the head income from house property if 2 conditions are satisfied. So whatever rental income you are earning from a house property, it will be taxable under which head? Under the head income from house property if 2 conditions are satisfied. What are those 2 conditions? Condition number 1, there should be a house property. Condition number 2, assessee should be owner of such house property. So what are the two conditions? Condition number 1, there should be a house property, and condition number 2, the assessee should be owner of such house property. Only if these 2 conditions are satisfied, whatever income you are getting from a house property will be taxable under the head income from house property. Now sir, what do you mean by a house property? What do you mean by a house property? House property means building and land appertaining to such building. What do you mean by house property? House property means a building and land appertaining to such building. Sir, can you please give us an example? Now, when we say this is a house property, now the compound area, the garden area, the parking area, etc., all these areas, the land which is adjacent to this house property, which is attached to this particular house property, that will also be treated as house property. So you would have seen people giving a house on rent along with this parking space. Parking space will also be there. So this also will be treated as house property. So this entire structure as a whole will be treated as house property. House property means what, sir? Building and land appertaining to such building. Now, let us take some example to understand this topic clearly. See, what is section 22 telling? Section 22 says, if you are going to satisfy two conditions, then the income which you are arriving, the rental income which you are arriving will be taxable under the head income from house properties. What are these two conditions? Condition number one, there should be a house property, and condition number two, the assessee should be owner of such house property. The assessee should be owner of such house property. What do you mean by house property? Building and land appertaining to such building. Now let us take one example. Dilip has this house property. Dilip has this house property. I have given this house property on rent to Karina Kapoor. I have given this house property on rent to whom, sir? Karina Kapoor. So I am earning a total rent of 1 lakh rupees. Now where will this rent go? Under which head will it be taxable? It will be taxable under income from house property. Why, sir, it is taxable under income from house property? Because Dilip has had Dilip is the owner of, there is a house property and Mr. Dilip is the owner of such house property. So I am giving a house property on rent to Karina Kapoor. Whatever rent I am going to earn, that will be taxable under the head income from house property. Sir, what if Karina has given your property on rent to Katrina? Sir, what will happen if Karina gives your property on rent to Katrina? So what if Karina is doing subletting, etc.? In such cases, will the income be taxable under the head income from house property? Answer is no. Now, I am earning a rent by letting my property to Karina, income from house property. Karina is letting out the same property to someone else. Karina is letting out same property to someone else. Whatever income she is earning will either go under income from other sources or under business head. It will go under the head income from business if it is her business. If Karina's business is only giving property on rent. Now, example number 2. I have a PG. I have hostel. So I am running PG or hostel. So sir, this is my business. So running PG or hostel is my business. So whatever income I am earning by this, whatever income I am earning by giving these rooms or rent, where will it go? It will go under the head income from business or profession. Similarly, Taj Hotel, meaning the hotel business, etc., which you are seeing, the people who are running hotels, etc., where will see? Basically, this PG which you saw, no, that was my house property, correct? See, what do you mean by house property? Building and land appertaining to such building. Sir, this Taj Hotel is a house property. Yes, sir, this Taj Hotel is a house property. So, sir, then in such cases, if I am giving the rooms on rent, if Taj Hotel is giving rooms on rent, then the income should be taken under the head income from house property. No, sir, answer is no. Now, Taj Hotel's business is only, their business is only giving the rooms on rent. So if your business is only giving the rooms on rent, then obviously this income which you are earning will be taxable under PGBP, under income from business and professions. So what if my business is only renting? See, I have some 8 house properties and I am earning rental income from all the 8 house properties, and that is my main business. In such cases, obviously, it will go under business or profession. Now, let us take one beautiful example wherein there is a builder. So what does a builder do? Builder is going to do construction, and whatever thing he has constructed, okay, whatever houses or flats, etc., he has constructed, he is going to sell them. So what does a builder do? He is going to do construction activity, he is going to construct some buildings, flats, etc., and he is going to sell those things. Now in such cases, whatever income he is earning, by sale of flats, will go under the income from PGBP, that is income from business and profession. Now in this example, there is a builder who has constructed totally 10 flats. Flat 1 to 8 are sold by him. Therefore, whatever income he is going to earn from this flat will go under which head, sir? It will go under business or profession. There are 2 flats which is not yet sold. Flat number 9 and 10, they are the unsold flat. Now this unsold flat, he has rented to someone. These unsold flats has been rented by him to someone. Where will the income from this unsold flats go, sir? Where will this rental income go? This rental income will go under income from house property. Sir, house property. Why, sir? It will go under income from house property. See, is there a building? Yes, sir, there is a building. Is assessee owner of that building? Is the builder owner of that building? Answer is yes, he is the owner of this building. Therefore, whatever rent he is going to earn will be taxable under the head income from house property. Please note, by selling the flats, taxable under PGBP. By renting the unsold flats, taxable under income from house property. Now, there is one more example wherein Mr. D is the owner of a land. So there is a land. Who is the owner of the land? Mr. D is owner of the land. On the land belonging to Mr. D, Mr. A has constructed a building. Who is the owner of the building? Building's owner is Mr. A, and who is the owner of the land? Land owner is Mr. D. So Mr. D has a land. On this land, Mr. A has constructed a house property and he has given this house property on rent. Now whatever rental income Mr. A is earning, under which head will it be taxable? It will be taxable under the head income from house property. So it does not matter. It does not matter whether you are the owner of land or not. What it matters is there should be a building and assessee should be owner of that building. It does not matter whether I am the owner of the land or not. I should be owner of that particular building. Example number 7. Sir, what if I am letting out, I am renting land, sir? What if I am renting land? Is land a building? No, sir, land is not a building. Therefore, whatever income you are going to earn by letting out this land will either go under your business income if it is your business, or it will go under income from other sources, or it will go under income from other sources. So if letting out of land is your business, income from business. If you just casually you have a land and you have given that land on rent for 1 or 2 days, it will go under income from other sources. So I hope you have understood what this section 22 is trying to tell. Section 22 says whatever rental income you are going to earn by renting out a building will be taxable under the head income from house property if you are satisfying 2 conditions. What are the 2 conditions? There should be a house property and assessee should be owner of such house property. Assessee should be owner of such house property. Now, sir, how many types of house properties are there, sir? How many types of house properties are there? Basically, house properties for the purpose of income tax law are divided into 2 categories. For the purpose of income tax law, these house properties are divided into 2 categories. One is called as let out property and another one is called as self-occupied property. One is called as what? Let out property. Another one is called as self-occupied property. So what is this let out property? Let out property means the property which you have given on rent. Let out property means what, sir? Property given on rent. The house property which is given on rent by you. You have rented this property to someone. So obviously from this property you are going to earn rent. Therefore, these let out properties are always taxable under income from house property. And one more type of property is self-occupied property. One more type of house property is what, sir? Self-occupied property. So what is this self-occupied property? The property which is used by the owner himself. The property which is occupied by, self-occupied, which is used by the owner himself is called as self-occupied property. See, let out property means property which is given on rent. Self-occupied property means what, sir? That property which is used by the owner for his own use. His own use. It is called as self-occupied property. Now, owner can use a property for himself in 2 scenarios. I mean, there are 2 possibilities that if I am the owner of the property and I can use this property either for my business purpose or for my residence purpose. So, if I am an owner of a house property, I can use that house property for 2 purposes. One is for my business purpose, one is for my residence purpose. So, if I am using a house property for my business purpose, then income tax law says ignore it. I don't want to tax you on this house property. What does income tax law say? Income tax law says if you are using any property, for your business purpose, if you have a house property which is self-occupied by you for your business purpose, then please ignore it. I am not going to tax you on this particular house property which you are using for your business purpose. Similarly, if you have a house property which you have given on rent, if you have a house property, if you are given it on rent, then obviously it is let out property. So if you have a house property which is self-occupied by you, which is occupied by you, which is used by you for your own use, and it is for your residence purpose. Self-occupied property can be of two cases, two types. One is for business purpose I am using it, or I am using it for my residence purpose. If it is for business purpose, please ignore it. If it is for your residence purpose, then check how many properties you have. If you have one or two properties, meaning up to two properties, it is exempt. Law says I am not going to collect any taxes from you on this property. Up to two self-occupied property, it is exempt. You don't have to pay any taxes. If you have more than two properties, if you have more than two self-occupied properties, then law says up to two it is exempt, and whatever remaining properties are there, more than two properties if you have, then up to two exempt. Apart from that, the remaining properties which are there, no, they will be treated as deemed to be let out property. The remaining properties will be treated as deemed to be let out property. They are going to deem, they are going to assume that these properties are rented by you, they are let out by you, and accordingly they are going to compute your income from house property. Sir, can you please explain this? Say for example, I have 5 house property. I have how many house properties? I have 5 house property, and all these 5 house properties are used by me for my own purpose. It is used by me for my residence. In such cases, law says, see, select any 2 properties out of this. 2 properties of your wish will be exempt. You don't have to pay any taxes. Which taxes are you talking about? I am talking about you don't have to pay any income tax on these properties. And more than two, the remaining 3 properties which are there, no, that will be treated as deemed to be let out property. On this, I will have to compute my rental income and accordingly pay, find my income from house property and pay income tax on that. Sir, why has the income tax authorities told that the self-occupied property for your business purpose, is required to be ignored, sir? Sir, don't you think the law is going to lose a revenue? Answer is no. Why have I told like that? Say for example, Priya Saris. Now Priya Saris, the building where the Priya Saris is located, no, where the Priya Saris shop is located or store is located. Now let us see what will happen if this property is rented property. If I would have taken this property on rent, then obviously I would have paid rent on this property. I have to pay rent on this property. If I have to pay rent on this property, meaning wherever Priya Saris is doing its business, if that property is rented, if Priya Saris has taken that property on rent, then obviously Priya Saris is going to claim rental expenses in their profit and loss account. So in whenever they are computing their business income, on the debit side they will have an expenses called as rent expenses. Obviously if their rent expenses is going to increase, if they have an expenses, their income is going to decrease. If their income is going to decrease, obviously the amount of income tax which they are going to pay also will decrease. On the other hand, if I am doing business on my own land, on my own property, so if I am doing business on a property whose owner is me myself, in such cases I will not have any rental expenses. In such cases, if you see my profit and loss account, there will be no rental expenses. If there is no rental expenses, the income will increase. If profit will increase, if profit is going to increase, then income from business will increase. If income from business is going to increase, then the income tax which I am going to pay to the government will also increase. So this is actually the main logic behind it. Law says if you are using a house property for your business purpose, please ignore it. Completely ignore it. You don't have to worry about it. You can completely ignore it. Now, sir, my question to you is, how do I compute? The rental income, sir? So how do I compute this income from house property? Is there any mechanism for computing the income from house property? Answer is yes. So is there any mechanism for computing the income from house property? Yes. The law has given a very beautiful and very simple method for computing income from house property. What does the law say? The law says Now let us take an amount to be your rental. Let us say for example, there is this house property which you are saying. This house property is rented by me for rupees 50,000 per month. Now, don't you think there is a possibility that in my bank account I am taking only 5,000 rupees rent and balance 45,000 I am taking by from my tenant in cash? So if I am taking some rent in cash, obviously I will not be showing this rental expenses to anyone. If I am taking some amount in cash, I will obviously not be showing this expense to anyone. If I am not showing this expenses, if I am not showing this income, how will the government come to know? So in my bank there is only a rent of rupees 5,000. So there is always a doubt, sir. Will government accept 5,000 rupees as rent of this property, and will I have to pay tax only on 60,000, or is there any other method? See, sir, actually I am earning a rent of 6 lakh rupees per annum. But how much am I showing to the governments? How much am I receiving in my bank? Only 60,000. So, will government accept this 60,000 rupees? Or is there a mechanism for computing income from house property? Government is not going to accept this 60,000. There is a method of computing the income from house property. What is that, sir? Now, what law says is, I am going to compare your actual rent. I am going to compare your actual rent with our expected rent. Law says I am going to compare your actual rent with the rent expected by us. Now I am going to take whichever is higher. Whatever is higher, I am going to take that amount, and that will be taken as your gross annual value. That will be taken as your what, sir? That will be taken as your gross annual value. From this gross annual value, there are some reductions which are required to, there is some subtractions which you have to do, then you will arrive at income from house property. So what is the law telling? Whatever actual rent you are earning, no, I am not going to consider that as income from house property. I am not going to consider that as income from house property. From your actual rent, with your actual rent, I am going to compare my expected rent. What amount of rent can this property actually give us? What is my expectation from this property? What is my expected rent from this property? I am going to compare this expected rent with your actual rent. I am going to take the higher amount. I am going to take the higher amount as your income from house property. I am going to take what? The higher amount as your income from house property. So how is this expected rent calculated? There is a method which you are going to see now. So now, how is this expected rent calculated, sir? Law says I am going to take municipal value of the property, compare that municipal value with your fair rent, and I am going to take whichever is higher. Whichever is higher, I am going to compare with the standard rent, and now I am going to take whichever is lower. Sir, just a second. Can you please repeat? First, I am going to compare what? I am going to compare your municipal value with your fair rent. And what am I going to take? I am going to take whichever is higher from this. This whichever is higher is going to be compared with standard rent. First compare municipal value and fair rent, take whichever is higher. This whichever is higher is going to be compared with standard rent. Then I am going to take what? Whichever is lower. Now whatever amount I have got now, whichever is lower, that will be called as my expected rent. That will be called as my expected rent. So first fair rent compared with actual municipal value, compare that with fair rent, take whichever is higher, compare that whichever is higher with standard rent, take whichever is lower. That whichever is lower will be called as your expected rent. That whichever is lower will be called as your expected rent. Compare that expected rent with your actual rent, you will get your GAV or gross annual value. So okay. But tell us what you mean by this municipal value. See, municipal value means the value as per municipality or municipal record. Normally, every property will have its own value as per government records. As per government records, as per the municipality, what is the value of your property? That is nothing but municipal value. Okay, sir. Then tell us what do you mean by this fair rent? Fair rent means normally if there is any other kind of property of same type, if there is any other similar kind of property in that locality. What is fair rent, sir? The rent for similar kind of property, similar house property at that locality. The rent for similar kind of property. What is fair rent? Rent for similar property, rent for similar property at that locality. So how much are you going to pay, or how much is the rent which people are charging for this same kind of property? How much is the rent which people are charging for this same kind of property in that locality? That will be taken as what? That will be taken as fair rent. So I am going to compare municipal value with fair rent. Now I am going to take whichever is higher of those. So in our example, let us take that municipal value of this property is 4,50,000 and fair rent of the property is 5 lakh rupees. I am going to take what? Whichever is higher. Now this whichever is higher I am going to compare with standard rent. This whichever is higher is going to be compared by me with standard rent. Now in this case the standard rent is 6,20,000. Now I am going to compare both of them and take whichever is lower. Sir, what do you mean by the standard rent? Standard rent is the minimum amount of rent. What is standard rent? The minimum amount of rent which you get, the maximum amount of rent. What is standard rent, sir? Standard rent is the maximum amount of rent. Maximum amount of rent which you are allowed to charge as per Rent Control Act. So there is something called as Rent Control Act. As per that Rent Control Act, what is the maximum amount of rent you can charge for your property? What is the maximum amount of rent you can charge for your property? It has been given by this Rent Control Act. So what is the standard rent? Standard rent is that maximum amount of rent which you can charge for the property. Compare your whichever is higher with standard rent, you will get your expected rent. Whichever is less is required to be taken by you and you will get your expected rent. You will get your expected rent. I'll repeat now. So first you are required to do the comparison between what, sir? Municipal value and fair rent. Compare. Whichever is higher will be whichever is higher is required to be taken. This whichever is higher you are required to compare. This whichever is higher. This whichever is higher you are required to compare with standard rent, and you are required to take whichever is less. This whichever is less will be called as what? Expected rent. This expected rent you are required to compare with your actual rent, and you will get your gross annual value. You will get your what, sir? Gross annual value. Now from this gross annual value you are required to subtract something called as municipal taxes. From this gross annual value subtract municipal taxes, you will get net annual value. From gross annual value you are required to subtract what? Municipal taxes, you will get net annual value. Sir, what is this municipal tax? Municipal tax is nothing but the property tax, CVH tax, local tax, house tax, etc. which you are going to pay on this property. It is the property tax. Basically, in simple words, it is the property tax. Normally, municipal taxes, if it will be given the question. So if it is given in percentage format, say the question says municipal tax is 10%. So sir, on what amount should I take this 10% on? Municipal taxes is required to be computed on this municipal value. So if it is given in your question in percentage format, you are required to take it as a percentage of municipal value. You are required to take it as a percentage of municipal value. Now from this gross annual value, you are required to subtract municipal taxes. You will get something called as net annual value. So if municipal taxes are given in percentage format, you are required to reduce it from what, sir? You are required to reduce it from you are required to compute it on municipal value. Now what is very important about this municipal tax is that municipal tax is allowed as deduction. I repeat, municipal taxes is allowed as deduction only when it is paid. So municipal taxes is allowed as deduction on payment basis. It is allowed as deduction on payment basis, and it should be paid by whom? It is required to be paid by owner. Only if the municipal taxes is paid, and if it is paid by the owner, it will be allowed as deduction. Sir, what if municipal taxes is paid by the tenant? It is not allowed as deduction. So what if 50% is paid by owner and 50% is paid by tenant? Then only your 50% will be allowed. So municipal taxes will be allowed only if it is paid, and who should pay it? It should be paid by the owner. It should be paid by whom? It should be paid by the owner. Now one more important point to be noted over here. Say I have paid municipal taxes for around 5 years together. Sir, from last 5 years I have not paid any municipal taxes. Now this year I have paid all these municipal taxes. This year I have paid all these municipal taxes. So can I take deduction of all these 5 years in this year? Answer is yes. That is how you are supposed to do. So if you have not paid municipal taxes for any year, then you cannot claim deduction for that year. Sir, if I have paid it in future years, answer is yes. Whenever you are paying, you can take the deduction. You can reduce it from your gross annual value to get your net annual value. So once you get your net annual value, you will be allowed to take deductions under section 24. So under section 24 of income tax law talks about deductions from your for your income from house property. For computation of your income from house property, are there any deductions which you are allowed to take? Answer is yes. Where are these deductions given? These deductions are given under section 24. These deductions are given under section 24. Section 24A talks about standard deduction. Section 24B talks about interest on loan. The deduction of what? Interest on loan. So once you reduce that, you will get your income from house property. I'll repeat once. How are you supposed to compute this income from house property, sir? Sir, how is this income from house property computed? First, take municipal value. Compare that municipal value with fair rent. Take whichever is higher. Whichever is higher is required to be compared with standard rent. Take whichever is lower. Now this amount which you have got. Now this amount is called as expected rent. Compare this expected rent with your actual rent. Compare this expected rent with your actual rent. Take whichever is higher. This amount will be called as your gross annual value. From this gross annual value, reduce something called as municipal taxes. Once you reduce this municipal taxes, you will get net annual value. From this net annual value, reduce the deduction under section 24. How many types of deductions are there? Two types of deductions are there. One is 24A, which is standard deduction of 30%, and another one is 24B, which is interest on loan, which is taken for house property. Once you reduce these two deductions from your NAV, you will get something called as income from house property. Sir, you told us what municipal taxes means, you told us what fair rent means, you told us what standard rent means, and you also told how this expected rent is arrived on, and also you have told what is this municipal taxes, etc. Sir, can you please tell us what do you mean by this actual rent? What is the meaning of this actual rent? What is the meaning of this actual rent? Actual rent, very beautiful and very important definition. The meaning of actual rent is very important to understand the income from house property. What is this actual rent, sir? Actual rent means rent received plus rent receivable minus unrealized rent. What do you mean by actual rent? Rent received plus rent receivable minus unrealized rent. Rent received plus receivable minus unrealized rent. Rent received plus receivable minus unrealized rent. Sir, can you please explain it? Rent received plus receivable minus unrealized rent is actual rent. But what does it mean? Say for example, there is this property which I have given on rent. On a monthly rent of rupees 10,000 per month. Okay. So for 12 months period, I have given this property on rent to Mr. A. I have given this property to this particular person. I have given this property on rent. Now what this person has done is, he has paid rent for 9 months, and for 3 months the rent is not yet paid. Please note, for 9 months the rent is paid. Already it is paid, therefore it is received. So I have received 90,000 rupees rent. For 3 months the rent is not yet paid. Can I say that this is rent receivable? Can I say that this rent is receivable? Yes, sir, you can always say that this rent is receivable. So rent received is 90,000. Rent receivable is how much? 30,000. The 3 months rent which is not yet paid to me is receivable. Correct? So what is actual rent? Actual rent is rent received plus rent receivable minus unrealized rent. So rent received is whatever I have actually received. Rent receivable is the rent which he has to pay me. He has stayed in the property for this period but not paid the rent to me. Correct? Rent receivable means what, sir? He has stayed in the property for this period but not paid the rent for that particular period. That is rent receivable. Now, sir, then what does this unrealized rent means? Unrealized rent means what, sir? Now, in our example, what has happened? He has not paid the rent for 3 months. He has not paid the rent for 3 months, correct? Yes, sir, he has not paid the rent for this 3 months. So this is rent receivable. Now, this 3 months rent, what has happened is this 30,000 he has not yet paid. What he has done is, he out of this 30,000 which is receivable, out of this 30,000 which is receivable, he has paid me, out of this 30,000 which is receivable, he has paid me 20,000 rupees. He has paid me 20,000 rupees and 10,000 rupees he never paid. I'll repeat. See, 3 months rent was receivable, correct? 3 months rent was receivable. Out of this 3 months rent, 2 months rent he has paid, okay. 1 month rent he never paid me, and he is never going to pay me, and he is never going to pay me. So this is my bad debts. This is my bad debts of rent. This is my bad debts of rent. I am never going to receive this 10,000 from you. This 10,000 rupees, which is my bad debts, which is my bad debts of rent, which I am never going to receive, is called as unrealized rent. What is unrealized rent? Unrealized rent is the amount of rent which I am never going to receive. I am never going to receive. In short, it is the bad debts of rent. In short, what is it? It is the bad debts of rent. So how am I going to take, sir? In this case, in this particular example, what will be my actual rent? In this example, your actual rent will be 10,000 into 9 months because it is received, plus 10,000 into 3 months which is receivable, minus 10,000 into 1 month because this 1 month's rent he is never going to pay me. This 1 month rent, if you see in this 3 months, 1 month rent he is never going to pay me, right? This 1 month rent I am going to subtract. So what is my actual rent, sir? My actual rent will be 90,000 plus 30,000 minus 10,000, which is 1,10,000. Which is how much? 1,10,000 rupees. Which is 1,10,000 rupees. Which is 1,10,000 rupees. Now, what the law says is actual rent will be allowed as deduction. What the law says is the actual rent, this actual rent which you are seeing, this actual rent will be allowed as deduction. This actual rent will be allowed as deduction if you are going to satisfy 4 conditions. If you are going to satisfy how many conditions? 4 conditions listed in rule number 4. So income tax rules, rule number 4 of income tax rules gives the condition. If you satisfy this condition, only then you will be allowed. You will be allowed to reduce or deduct this unrealized rent from your actual rent computation. Sir, what are these 4 conditions? What should I satisfy to reduce this unrealized rent, sir? You are required to satisfy these 4 conditions. Condition number 1: tenancy should be bona fide. The law says the person to whom you have given this property on rent should genuinely be given, meaning it is not that just like that I am reducing this unrealized rent. No, there should be a genuine case of tenancy. You should have actually rented out the property to someone else. You should have actually rented out to the property. So the tenancy should be bona fide. Then the tenant should have vacated the property. The person to whom you have given this property on rent, who has not paid you the rent, he should have vacated that particular property. Then the tenant should not have occupied any other property of the SSC. It is not that I have asked the tenant to vacate this property and I have given my other property on rent to him. What does the law says? The law says, see, condition number 1 is the tenancy, the relationship between the owner and the tenant should be genuine, it should be bona fide. Actually, I should have given the property on rent to someone, so the tenancy should be bona fide. The tenant should have vacated the property, he should have vacated the property, and tenant should have not occupied any other property of the same SSC. So he should not have occupied my other property. And last condition says I should have taken reasonable step. I should have taken reasonable steps to recover this unrealized rent. Sir, what do you mean by reasonable step? Reasonable steps means I should have, say, given an advocate notice. I should have given a police complaint that I have not received rent from this particular person, etc. So I'll repeat. Actual rent means what, sir? Actual rent means rent received plus receivable minus unrealized rent. This unrealized rent will be allowed as deduction if these 4 conditions are satisfied. What are these 4 conditions? Tenancy should be bona fide. Tenant should have actually vacated the property. Tenant should have not occupied the property any other property of the same SSC. And tenant the reasonable steps should have been taken by the owner to recover this actual unrealized rent. Now, this is the meaning of actual rent. Now, we saw over here, while computing income from house property. What are we doing? We are comparing municipal taxes with fair rent, taking whichever is higher, comparing that with standard rent, taking whichever is lower. That whichever is lower will be called as our expected rent. This expected rent I am going to compare with whom? I am going to compare with actual rent. Now we have understood the meaning of actual rent. I am going to get something called as gross annual value. From this gross annual value, you should reduce municipal taxes. You will get something called as net annual value. From this net annual value, reduce deductions under section 24. You will get your income from house property. From this net annual value, reduce deductions under section 24. Under section 24, you will get your income from house property. Sir, what are these deductions, sir? Sir, can you please tell us what are these deductions under section 24? What is this section 24 talking all about? Now under section 24, under section 24 there are two deductions. One is standard deduction as per section 24A, and another one is interest on loan. So there are basically these two deduction 24B. One is standard deduction and another one is interest on loan. Now what is the standard deduction, sir? See, what the income tax law says is you don't have to keep the receipts of all the payments which you are making. You don't have to give me the documentary evidence that this is my electricity charges, this is the insurance which I have taken for my house, this is my water charges, etc. I am not going to allow you all those expenses. So whatever repairs and maintenance you are incurring, whatever parking charges you are paying, say maintenance charges which you are paying, electricity charges which you are paying, water charges, insurance charges, etc. All these expenses I am not going to allow as deduction. What I am going to do is, whatever expenses you are incurring, straight away 30% of that. Straight away, whatever expenses you are going, you are actually incurring, I am going to forget it. Straight away, I am going to give a flat deduction of 30% of NAV. So I am going to take your NAV. 30% of this NAV will be allowed to you as your deduction. Straight away, 30% will be allowed to you as a deduction, and you can take this 30% deduction straight away. Whatever NAV you are getting out of on this NAV, 30% flat deduction will be allowed to you as a standard deductions. So you don't have to keep records of all these expenses which is incurred by you. 30% of NAV flat you can take as deduction. Now, sir, is this the only deduction? No. So this is very simple. Whatever NAV you are getting, 30% you allow under 24A. There is one more deduction which is interest. Section 24B. Section 24B talks about what? Section 24B talks about interest. So if you have taken any loan, for your house property, what type of loan, sir? If you have taken any loan for construction of your house property, purchase of your house property, renovation of your house property, repairs of your house property. If you have taken any loan for your construction, purchase, repairs, renovation of the house property, then whatever interest you are paying, that will be allowed as deduction. Is there any limit? Yes, there is a limit which we will see in next few seconds. But if there is a loan which is taken by you for construction, purchase, renovation, repairs of the house property, then that interest which you are paying, that interest will be allowed as deduction. Sir, from whom should I have taken this loan? The loan can be taken from any person. You can take a loan from the bank or financial institution or friends or family members. So loan can be from any person. Please keep this in mind. Loan can be from whom? Any person. It can be from a bank, financial institution, friends, family members, etc., etc., etc. What is the crux here? That loan should be taken for construction, purchase, repairs, renovation of house property. In such cases, whatever interest you are paying, that will be allowed as deduction. Sir, I have a question. What is your question? Sir, what if I take a fresh loan? What if I take a fresh loan for repayment of? What if I take a fresh loan for repayment of old house property loan? Sir, I already have a loan. See, in this example, let me take this example. I already have a house property loan taken from HDFC Bank. The interest rate is 14%. The interest rate is how much? 14%. Now to repay this loan, because the interest rate is too high, what I have done is, I have taken loan from State Bank of India, who's offering me loan at 9% only. Who's offering me loan at 9% only. So to repay my old house property loan, I am taking a fresh loan. To repay this old house property loan, I am taking a fresh loan. Will I get the deduction of interest? Will I get the interest deduction, which is will I get the deduction of the interest which is paid on this fresh loan? Answer is yes. So if you have taken a fresh loan for repayment of old house property loan, then whatever your interest you are paying on that fresh loan, that will also be allowed as deduction. So interest should be taken for construction, purchase, repairs, innovation of house property. Sir, you said there is a limit for interest. Answer is yes, there is a limit for interest. Sir, what is the limit now? As we know that there are two types of house property. One, house properties are divided into two categories for income tax purpose: let out and self-occupied. So if your property is a let out property or deemed to be let out property, if your house property is a let out property or deemed to be let out property, then any amount of interest paid is allowed as deduction. If your property is a let out property or deemed to be let out property, if your property is let out or deemed to be let out. So what is this deemed to be let out property? So more than two SOPs which you have, that is called as what? Deemed to be let out property. So if your house property is a let out property or deemed to be let out property, whatever amount of interest you are paying on such properties is fully allowed as deduction. Is fully allowed as deduction. You don't have to worry. You are paying an interest of 1 lakh rupees, 5 lakh rupees, 50 lakh rupees, 5 crore rupees. I don't care. Whatever amount of interest you are paying, please note, whatever amount of interest you are paying for this let out or deemed to be let out property is fully allowed. It is fully allowed. However, if your property is a self-occupied property, which self-occupied? If your property is a self-occupied property for residence purpose, if your property is a self-occupied property for residence, sir, why not business? Business anyways it is not, we have to ignore, right? Business anyways it does not come under the scope of income from house property. Therefore, if there is a self-occupied property and the self-occupied property is for your residence purpose, then there are two scenarios. Case number 1, you will get a deduction of 30,000. Case number 2, you will get a deduction of 2 lakh rupees. So if your property is a self-occupied property for residence, then you will either get an interest deduction of 30,000 or you will get a deduction of rupees 2 lakh. Sir, when am I going to get this interest deduction of 2 lakh rupees? You are going to get this interest deduction of 2 lakh rupees if these conditions are satisfied by you. When am I going to get this interest deduction of 2 lakh rupees, sir? You will get the interest deduction of 2 lakh rupees if these conditions are satisfied. What are the conditions? Condition number 1: the loan is required to be taken on or after 1/4/1999. You should have taken the loan on 1/4/1999 or anytime after 1/4/1999, and the loan should be taken by you for construction or purchase of the house property. Condition number 1, loan should be taken on or after 1/4/1999. Condition number 2, loan should be taken either for construction or for purchase of house property. Condition number 3 says, if you have taken the loan for construction of house property, then the construction should be completed within 5 years from the end of the financial year in which loan was taken. Construction should be completed within 5 years from the end of the financial year in which the loan was taken. I repeat. Sir, 2 lakh interest deduction. If I have paid an interest up to 2 lakh, when will I get this deduction? You will get 2 lakh interest deduction if 3 conditions are satisfied. Condition number 1, loan is taken on or after 1/4/1999. Loan is taken either for construction or purchase of house property. And if you have taken, condition number 3 says, if you have taken the loan for construction, construction should be completed within a period of 5 years from the end of the financial year in which loan was taken. Say for example, loan was taken by you on 14th July 2022. Now this 5 years will be calculated from this which date, sir? So this 14th July 2022 falls in the financial year 22-23. When is this year going to end? This year is going to end on 31st March 23. So from this 31st March 23, you are going to take 5 years. So if you have taken loan for construction purpose, the construction should be completed within 5 years from the end of the financial year. What is the word telling? 5 years from the end of the financial year in which loan was taken. So what is the cutoff date, sir? The construction should be completed within 31st March 2028. 31st March 2028. Okay. Now, if it is not falling under this special case, then the interest deduction which will be allowed to you will be 30,000 rupees. Special case, it is 2 lakhs. Other than special cases, it is 30,000. Sir, can you please give an example for that? Say for example, if you have taken loan for repairs or renovation, how much deduction you get? 30,000 rupees. Please note, this limit is for what kind of property? Self-occupied property. This limit is for what kind of property? Self-occupied property. So if you have taken the loan for repairs or renovation, if you have taken the loan before 1/4/1999, if you have taken the loan for construction and the construction is not completed within 5 years, then the 30,000 limit will be there. Now, one very important point. Major mistake which students do while computing income from house property in respect of interest is this particular point. Now, very important point. In case of self-occupied property, in case of what? In case of self-occupied property, maximum amount of interest which will be allowed as deduction. Maximum amount of interest which will be allowed as deduction. Maximum amount of interest which will be allowed as deduction is limited or restricted to rupees 2 lakh. So if you have more than one SOP, that is up to 2 SOPs are there. So you have two self-occupied property. Assuming you have two self-occupied property, and for both of them you have taken a loan, and for one property you are paying an interest of 2.5 lakhs, and for another property you are paying an interest of 1 lakh. So totally how much rupees interest you are paying? You are paying an interest of 3.5 lakhs, correct? Totally you are paying an interest of rupees 3.5 lakhs. So sir, will I get a deduction of this 3.5 lakhs? Answer is no. Answer is no. Sir, but there are two properties. No. There are two properties. No. For one property it is 2 lakh, another property also 2 lakh. No. The maximum amount of deduction for SOPs. So for SOPs will be how much, sir? 2 lakh rupees. So it cannot exceed 2 lakh. Whatever type of loan it does not matter. Maximum amount of deduction allowed for an self-occupied property is how much? 2 lakh rupees. 2 lakh rupees. So once you reduce these deductions, you will get an income called as income from house property. Now let me just show you the format for income from house property depending upon what type of house property it is. So what is the format, sir? First you are going to, in heading you are going to write the name of the assessee, whose income you are filing, then previous year assessment year, then computation of income from house property, then this is the format. First take municipal value, compare that municipal value with what's a fair rent, take whichever is higher, compare that with standard rent, take whichever is lower, that whichever is less is what, that whichever is less is nothing but your expected rent. This expected rent is required to be compared with actual rent. You will get your gross annual value. From this gross annual value, subtract municipal taxes, you will get a net annual value. From this net annual value, subtract something called as deduction under section 24, that is standard deduction of flat 30% of NAV and interest on loan. You will get something called as income from house property. Income from house property. Now, one very important point to be noted over here is, for self-occupied property, that is up to 2 self-occupied property. For self-occupied property, you will not have any municipal value, fair rent, standard rent, etc. Actual rent. All this will be taken as 0. All this will be taken as 0. So NAV for self-occupied property will be what, sir? 0. You will not have standard rent also. There is a possibility that you would have taken a loan for that house. If you have taken a loan, then you can reduce that loan amount. So in case of self-occupied property, self-occupied property, there may be loss. Normally there will always be a loss if loan is taken. If no loan is taken, then there is no income from self-occupied property. For let-out property, you will have all these items. So you will have to take municipal value, fair rent, whichever is higher, compare with standard rent, take expected rent, compare with actual rent. You will get JV, reduce municipal taxes. You will get NAV, reduce your deductions under section 24. You will get your income from house property. Similarly, for deemed to be lettable property. Sir, what is DLOP? So your SOP is more than 2, or I'll write it as more than 2 SOPs are called as deemed to be let out property. So more than 2 SOPs are called as what's a deemed to be let out property. For this deemed to be let out property, everything will be there except actual rent. Except actual rent, everything will be there. Sir, why not actual rent? So you have not rented this property to anyone. You have not rented this property to anyone. It is deemed that you have rented this property. Therefore, you will not have any actual rent. So you will have your municipal taxes, fair rent, compare with actual rent, you will get expected rent. That expected rent only will be your GAV, reduce municipal taxes, you will get NAV. From that you reduce that standard deduction and interest on loan, you will get your income from house property. So this is the basic discussion of income from house property. Let us treat this video as the part 1 of income from house property. There are various other concepts. Let me know in the comment section below how whether you like this or not, if there are any doubts or not, and let me know whether you are waiting for part 2 of this video or not. In the part 2 we will be discussing about the other concepts of income from house property, like what is vacancy. Sir, what if I'm letting the property is partly let out and partly self-occupied. 50% of the property I'm giving on rent, 50% I'm occupying it for myself. What if there are 2 owners for a property, etc., co-ownership? What will happen in all those cases? That you'll have to wait for the second video. I hope you enjoyed this video. Thanks a lot. Let us meet in the next video. Till then, tada, bye bye, take care.